Broadcast is now starting. All attendees are in listen-only mode.
Good evening, everyone, and welcome to the March edition of Digging into the BI. This is where members of the Maryland, D.C., Virginia, and tonight, Oregon chapter get together and look at the latest issue of the member-only magazine, the BI. Tonight, we're going to be looking at Covista, Trex, VITL Farms, and United Therapeutics. This program is sponsored by the D.C. Regional Chapter, which is the state of Virginia, DC, and Montgomery County, Maryland. And then it's also sponsored by the Maryland chapter, which is all the other counties other than Montgomery County. So we're glad you're here. We have a nice little turnout here, and let's just sort of get going. This is a standard disclaimer. We are doing these presentations for educational purposes. Investors should conduct their own review and analysis, just like we believe and Better Investing does. And if we are discussing securities, which we are, we will try to alert you to when we have them in our own personal portfolio or stuff. But regardless, we are not necessarily recommending or endorsing that you buy these stocks, nor are we necessarily endorsing or promoting any websites, products, or services that are showed here. This stuff is recorded. I really did try to get them up today recording, but it didn't work. But I am going to get those things up there pretty soon. So who are we at Better Investing? Again, I can see a lot of the people here in the audience. You are all regulars, so you know who Better Investing is. But in case you're looking at this webinar afterwards on the World Wide Web and you wonder who we are, Better Investing is an investment education organization out of suburban Detroit, and it's focused on long-term fundamental investing. All of the people presenting are volunteers in the Mid-Atlantic region, although tonight we do have a special guest from the left coast coming to join us. But otherwise, we're all pretty much Maryland, D.C., and Virginia. And if you're from this area, why don't you please consider joining us and making a presentation? We're here to help out and to be able to help you become a better investor. And one of the ways to do it is to be able to practice doing your stock presentations. Here's the location of where things are up on YouTube. It's a Digging into BI. Each of the webinars are organized into chapters, meaning each of the presentations are subdivided, so you can just advance to the one you're looking at. We're getting steady growth there. Things have been pretty busy at work for a long time, so I haven't been able to get those up for a while, but hopefully we'll get them done here in the next day or two and we'll be up to speed. If you're having trouble with seeing things, and we really haven't had this in a long, long time, audio problems, here are the places to find it. It's up on, it's up here. Let me go. There we go. It's either on this red circle that will help you there. This one will help you in case you're on the audio. More importantly, it's this green one that takes us to the handouts. That's where you want to be able to go to get the completed SSGs. Right now, we just have the 4 completed SSGs there. I had a real darn trouble getting these things stored and saved and sent over to Cheryl. So we're just sort of flipping around and trying this at the last moment. If you're here and you want the slide decks, just reach out to us at the email address here, Digging into BI, and we'll get them out to you shortly. Anyway, so why do we do this webinar? Well, we like to be able to show you how to be able to use the resources. If you're not a member of Better Investing, this hyperlink, and in fact, throughout this entire presentation, anytime you see a blue underline, high probability that it's going to be a hyperlink that can take you out to that location, particularly if it's in a PDF. So take a look at those things, but this is a location where you can be able to get a free 90-day trial. This works if you're already a member, give it to someone who's looking to join your club and to be able to participate with that. We are trying to be able to help out people that are beginners or maybe uncertain with their judgments with either the SSG. Sometimes we talk about the PERT report. We haven't in a long time. But really what we're trying to do is show you the best practices of a long-term fundamental investor. In fact, Cheryl just finished leading 2 consecutive Saturdays of teaching the SSG here in the Mid-Atlantic, and you had a very good turnout, didn't you, Cheryl?
Excellent. In fact, we unfortunately had to turn some people away, but we're going to do it again and grab people off the list. So please, if you were not able to attend for this class, please hold on and we will get to you.
Yes, I popped in for a little bit, but yeah, there was a good exchange and discussion. So if you're one of the people that were there this Saturday, we'll show you exactly how we do our SSGs. You'll get a feel for it. But this program here is really a joint program from the two Mid-Atlantic chapters. We are trying to be able to promote our model clubs in our area. We have two of them. And then we're also trying to promote your club in the Club Connect program. And Cheryl will talk about that in just a moment. But we also want you to be a part of the better investing community in the Mid-Atlantic. If you are not from Maryland, D.C., or Virginia, and you're here, welcome. We're glad to have you. You do not have to be either from this area, nor do you have to be a member of Better Investing to join and participate. We're just glad you're here and glad for the discussion. So in just over an hour, we're going to do 4 stocks, the 2 featured from the magazine, the member-only magazine, which is a stock to study, and the undervalued feature. And then we have 2 more. I think they're coming from, let's see, Marcia, you found yours from another model club. And Cheryl, yours came from, I think, the ticker heat map, if I remember right.
That's correct.
So anyway, so here's how you can be able to find this, and you do not have to be a member of Better Investing to get to this location on our website, is that it's at this home about us and news releases. These 2 were featured or announced in January on the 13th. And you can click on this. It's a great way, if you know, we already have our April one and the May one will be coming up shortly. Do us a favor. Take a look. We have 2 more coming up, Service Now and Decker's Outdoors next month. Why not do an SSG yourself so that you can be able to participate in a discussion next month when we discuss those stocks? The other thing we want to be able to let you know is that we want you to be able to be connected to our community, and there's 2 different ways to do it. If you come through where the red circle is, the My Account, when you sign into it, you go there. It will open up this screen capture on the left-hand side, and that's where you can sit there and hit the email and product subscription information, this green circle. It will open up this green highlighted screen capture on the right-hand side, and you can be able to sign up nationally for the e-newsletter right there, and you can also sign up for your local chapter news. And to be able to make sure they stick, you're going to have to hit the Save Changes. So here's what the headquarters weekly newsletter called the BI Weekly Newsletter. This is for members only. They will talk about a lot of events, including we have our national convention, and all 3 of us are going to be there in April, end of April. Please join us. We also had, this was last week, they already had the ticker talk, but they have a good stock ideas in terms of small companies that are here at the sort of orange one. And then here's a good way to be able to look at peers. We were actually talking about that during our SSG class this weekend. And so here's a good way to be able to take a look at finding some of the peers. We're also up on Facebook, although I missed it this month, ran out of time. But the fact is that we try to be able to get notices up there. If you're from this area, go ahead and like us and tag us so that when you do something from your club, it will show up on our page. We want to be able to start that dialogue. This is just one way to be able to do it. This is what's happening at the Maryland chapter. They have their stock pickers contest ongoing right now, but they also have a Talk It Up Tuesday that's going to be in April, and it's a virtual series. This is something that their new president has been working on, and she'll actually be one of our presenters next month. But the fact is that take a look at this. It really helps if you're in Maryland, but you know what? Even if you're not, I'm sure they'd be more than willing to have you participate and join. Cheryl, anything you want to tell us about what's coming up at the DC chapter?
Well, please join us. We have our virtual meetings for both our Model Investment Club of Northern Virginia and the Model Investment Club from Montgomery County, Maryland. The links are there on the page when you hit local events and click on either of those 2 club hyperlinks. You'll see the link to get into the meeting. They are both offering new stock presentations as well as education. And it's usually a very interesting chatter amongst not only members, but also visitors. and we welcome visitors. It's free to come and visit for both of those. And then the April Digging into the BI magazine is going to be on Monday, the 6th of April, and please join us again for that. And as Kevin said, if you are willing to come out to Chicago, we're going to be there as well.
Exactly. So anyway, let's sort of keep going. So we only have two clubs to feature this time, and this is one of the things you can do if you're one of our featured presenters. Is we like to be able to hear what's going on in your club. I was mentioning this to Marcia. I think it's really kind of fun seeing all the different names and people that get together. So this is the Montgomery County Model Investment Club. This is the one I'm a part of. We have 7 partners. We meet on the 3rd Wednesday of the month. There's the hyperlink for us to be able to do it. I couldn't get my education in stock study. We have 2 new people that joined our club. One of them's going to be doing their very first education. The other one's going to be doing their very first stock study. This picture here is actually a picture of about 4 different clubs here. What happens is once a quarter, we get together for a potluck after one of the other clubs has their regular second Saturday meeting. It's in the Silver Spring area. And what we do is we get together and we'll talk about what we like to eat. And then we usually talk either about kids and grandkids, or then we talk, eventually we get around to talking about stocks, which is the reason why we're all here in doing this. Cheryl, tell us about your club.
This is for the Model Investment Club of Northern Virginia, otherwise known as McNova. We started in 2008, currently have 14 partners. Next meeting is March 17th, the 3rd Tuesday of each month, 7 to 9, and there's our hyperlink as well. We're going to do an education reviewing management and stock to study right now to be discussed. And there, if you need to get in touch with us, there is the point of contact email. And as I said, please come. We welcome visitors. And like Kevin, I love to see all the different clubs and their names and what they're talking about. So please come and consider doing a presentation.
Marcia, you were talking about some of the interesting club names and stuff, I believe, when we were chatting. Any that sort of caught your eye, or anything that you found really kind of interesting recently interacting with some of the clubs out in your neck of the woods?
Well, I really like the Millennium Club. It's a 55-year club with better investing, 55 years plus.
Wow.
And I like Blue Chips and Salsa. I thought that's a wonderful women's club. And I think they brought in a new partner a couple of months ago who's from the DC area clubs. So that was a great club. Just very joyful people in our clubs out here in Oregon.
Well, and they are here in Maryland and in Virginia. So I'm glad to have you all here. Cheryl, why don't you tell us about how other clubs, if you're not in one of the ones that are featured here, how they can be able to connect and perhaps get new members to their club?
Yeah, this is a great program that was kind of revamped from an older one. It takes people who are looking for clubs to belong to. If they're individual investors and they've all of a sudden decided, I really need to belong to a club, that would work better for me, then this program is for you, as well as clubs. They're looking for new members. You know, if you've had attrition and people kind of coming and going type of situation, you may be in need of new members. So there are forms to fill out, and then you would submit them, and then you would they would send the word out to people in that area that you're looking for members. And now it's not even in the area because we're all virtual, and you can maybe meet each other and get together and decide you're a good fit.
Very much so. Very much so. Okay. So since this is called Digging into the BI, we like to at least talk a little bit about the magazine and what's in there, because that's the whole point of this. So here's the latest issue. I've asked this a few times, but most people like the paper version. I can't find my paper version. It came and I may have lost it, but the fact is that I could look, and when I was doing my stock presentations, I was able to look at the e-magazine to be able to get all the information I needed. You can also get it on an app like this, so it's also in your if you are over here on the app, you can look at it in your computer, laptop, tablet, smartphone, any kind of electronic device will work. So for those of you that are still proud of holding a piece of paper in your hand, that's great, but consider doing this and be able to impress your grandkids. Anyway, one of the things that's also good about the electronic version is that when you look at this green arrow over here, this is where you have to, it's a different sign in than for your regular stuff. So you go in here and click on this. But here's the other thing is where this red arrow is, any of the featured stocks, that's the undervalued feature and the stock to study. When they say there's additional information, this is where you're going to find it. So you come on in here, click on this, and then you just go to the issue that you're looking for to be able to get that additional information. For the magazine itself, you can hit on this green circle and it will open things up. What I noticed this time is I actually found two things of people from our area that were featured in this magazine. The first one, this is the member story column. This is where people write in and tell about it. But Rosalind Cleveland is in the Class Investment Club. They're in DC and Prince George's. They also have some people that are in North Carolina. But it was founded by four sisters with seed money from a yard sale. And now they have a portfolio of over $1 million. My goodness. We need to find them and get them involved here, Cheryl.
Oh, definitely. You're going on my contact list.
So anyway, I really like hearing stories about other people. And if yours is one of the ones here, go ahead and reach out to headquarters and get featured. It's a chance to be able to tell about your club, brag a little bit, but also to be able to sit there and just sort of be connected to the larger community. So I found this one really kind of interesting. And then the other one, this is actually from the Maryland chapter. This is another thing that they have. Angel McQuaid, who's in the DC regional chapter, she writes, besides the book review, she does this family column. And here she found someone that's a retired postal worker from Freeland, Maryland. And I had to look it up. It's right at the Maryland-Pennsylvania line in Baltimore County. He was a rural mail carrier, and he was delivering lots of Amazon packages. And that's when he decided, hey, maybe I ought to buy that. And he became a lifetime member. You don't have that available anymore back in the 1990s doing it. So I love hearing these little stories of what they learned and what's gone on. And again, reach out to Angel. There's a location here where you can do that and just tell them about what you're doing, because I think it's great for other people to hear what you're doing in your investment. Finally, this is the investor education column. This is really the second to last page on the magazine. South Florida has been doing a bang-up job with a series of different educational things here. Most of them have already passed, but they have their investor education fair coming on up this Saturday. It's free and it's virtual to take a look at it. But there's a lot of different things here. Ohio has one where some of them are in person, but some of them are virtual. Take a look at it. Same with Central PA. They have things. And I also see that Houston, Matt Spielman, who's down there, has gotten Mark and Ken to be able to come on down and be their featured speakers in Houston in person. So anyway, just a wide range of different things to take a look at. All right, a lot of chatting about that. Now it's time to be able to get in and talk about stocks. And the downside for all of you is that you get to hear me not just once, but twice. We didn't have anyone else that could really sort of step up. Marcia was really helped us out. Thank you, Marcia. But the thing is that I wanted to be able to make sure we got all of these stocks in here. So I did these kind of quickly. They're not always necessarily perfect, but that's okay. And I'm going to go through the two featured stocks, the stock to study, and then the undervalued feature, and be able to show you what I saw that I found really quite interesting. So the first one is Covista. Now, that just to let you know, when it was presented and announced, it was called Adtalem, if I'm saying it right, Global Education. But they changed their name in early February. And last night I was telling Cheryl, I said, look, I can't even find this company because when you put in the ticker symbol for Adtalem, it said it didn't exist. And it was just when I made one more search, I said, oh, the name changed in February. So the fact is it's now Covista, and that's how you're going to be able to take a look at it. But the story itself in the magazine is all from Adtalem. So here's what they say is that Adtalem, they're in, they're a for-profit education company. Most of us will remember them because they were originally DeVry. Originally, prior to that, they were Keller's something or other else that acquired DeVry. But they've really sort of morphed themselves over several different things, and I'll talk about it, where they're really predominantly focusing on healthcare workforce and stuff like that. And one of the things that's going on is there's a chronic shortage of healthcare workers, particularly nurses, and the Editorial and Advisory Security Review Committee thought that that would be a great opportunity for a for-profit company to come on in and take a look. Now, to let you know, some of these for-profit companies have gotten themselves into big trouble and have gone under. They look really good for a moment, and then they just sort of crash and burn. So that's one of the things to be able to keep in mind when you're looking at this one. In fact, one of the reasons they perhaps made their name Adtalem after being DeVry was because they too had gotten into trouble with this. One of the problems that happens is these students end up taking on this fair amount of debt going to their for-profit universities, and then they never can pay it back. They end up defaulting, and they may not always get placed in what they've sort of been promised. So that's sort of the trade-off with a for-profit education versus a traditional public education or anyone that's sort of set in that normal community. And the problem is, and I saw a story on this, I think it was on Frontline a couple years ago, where as much as we may want to poo-poo these for-profit education companies, the problem is that we need them to fill a lot of positions for us because the regular system is not equipped to be able to handle it. Some of it has been moving to community colleges to be able to help sort of become sort of a technical and trade and specialized stuff, but there still is not enough space for them to be able to take care of it. And one of the things that Adtalem, or in this case now Covista, has done is really gone into trying to be able to reach these non-traditional students, people that are doing this while they're working, to be able to get them through and get them credentialed in what they're doing. So here's, again, what I was looking at. I'm doing both of these in core. This one here, if you look at the stuff in the center here, these sales growth numbers are really anemic. You look at this, it's not even hit the same number sales growth it was in 2018. It went down, or up a little bit, down again, up a little bit more, a little bit more. What's happening is that Covista has been making a series of different acquiring things and divesting themselves of other things to get themselves positioned predominantly into healthcare. And so these numbers are showing really kind of anemic growth, a really kind of a flat line, which we would normally stay away from. However, the fact is that the way they're positioning themselves and the need that we have in the healthcare field, that this could be a really good potential. And again, for these particular companies to get to that 15% return, basically a doubling, you'd have to get where it is at $99.10. This was on Friday. It will be just short of 200. But look at what has happened. If you look at the same stuff with the prices, they stayed in the same range, and now all of a sudden they've just jumped. So there's something going on here. And the fact is, did we miss the boat on it? Or is it an opportunity to continue because of what's going on? And again, if you look at this, this is, again, in core, this is step 3, which is pretty much the same as what we see on the main visual analysis in Plus, is that you can see those numbers are really, really flat, a lot of dips in there. But here it is, the CEO, it came on in 2021. And I like always sort of marking where the CEO came in. George Nicholson said he put a star next to where a new CEO came in so he could just sort of watch their work. And you can see that really from 2021 going forward, how much this company has changed. He was the chief counsel when he came on board, but now he's been the CEO since 2021, and he's the chairman of the board now since 2024. So what's happened, like I said, is Covista is repositioning themselves. They started out as Keller Taylor out of Chicago. This is still a Chicago-based company, um, but what they did is they were doing stuff like helping people study for the CPA and other tests like that. They acquired Dravai, then they became publicly traded as Dravai in '91, and they've really sort of been growing by the demand for vocational education that's been going on in this country for the last 30 or 40 years. And that's sort of, they've moved away from sort of the business stuff to what we're into now in healthcare. So here's a list of a whole series of different acquisitions. One of the ones that they still have here is Walden. Some of these they've acquired and then let go. They've sold off to other ones. That's the reason why those growth numbers in the last, 3 to 8 years look really kind of flat, is that they've been really repositioning themselves. So here's some of the divestitures. They had stuff in Brazil that they got rid of. They also got rid of DeVry itself. It went to a private equity firm. They also sent some other financial services to a hedge fund in Paris to take a look. And they've really tried to focus on nursing, medicine, and wellness education, and also veterinary medicine. And that's sort of where their position is. So when Steve Beard came on, you can see that they also, when they changed their name Covista in February, they also got rid of some other products so that they were just totally focused on healthcare. They've really sort of jumped in all together on that. So they've made, like I said, they acquired Walden, which expands their behavioral health and nursing programs. Chamberlain College is all nurses and the like. They also have Ross School of Medicine. They also have the veterinarian medicine. So those are the types of things that they've sort of been making a concerted effort to do that. And I'll have to say that when I was found out where they had switched over and were focusing on this and changed their name, I saw a lot of interesting stories. So they really did a good job of promoting themselves in the general public to let them know what's going on. And I found that their CEO actually was pretty straightforward and pretty easy to understand. I always like to find it when the CEO is out there front and center talking about it. So here's what they're showing, and this comes from their website, that there's over 1 million nurses needed by 2030. Right now, there's about a $600,000, or they have like about 150,000 shortage of nurses, and with retirements and stuff in the next few years, they're looking that there's another 600,000. Again, Covista is saying that there's over 1 million. There's also a physician shortage. They are the 10. They help graduate 10% of all nursing students across the country. They have 24,000 healthcare graduates a year. It's an amazing number that no other university could come close to. So here are the five main. Okay, so here are the 5 institutions. I said Chamberlain is the nurses. Oops, back up. Is the nurses. Here's veterinarian medicines, more healthcare, and also stuff for doctors. So this is sort of where they're coming into it. If you take a look at this with Adtalem here, they have a really good sales growth at 9.6, whereas the SSG is showing it only at really about a 0. So it really sort of shows where they're coming into it. And when you look at things from where they really started making their changes in 2023, right here, you start to see the beginning of up, straight, and parallel. I'm not saying it's there yet. I'm not saying they're going to get there, but this is the start of something that looks pretty decent. And if you look at these growth numbers, again, 65% is too good to be true, but the fact is that it's still showing much better growth than what we saw over the entire 10 years. If you look at the evaluate management, again, this is only 3 years of data, but it's the most recent 3 years, and you can be able to see how much total debt is dropping, return on equity is growing, share pre-tax profit on sales is doing this. They also have enough cash to be they're buying back shares. So they've got all the things that we're looking for in a company. We get confirmation of this from Value Line and from CFRA to take a look at it. I'm going to go through this fast, so I do need to be able to get those slides up to you so you can be able to observe it. But all of the key metrics that you need in terms of management, they're there. And the nice thing about Value Line is these projections over here, they're even higher than they were on our SSG over the last couple years. So in other words, things are trending up for them. If we look at the forecasted sales, I'm going with 10%. You can be able to see what the analyst has. And really, just over the last couple of years, that's 11. I think that's pretty reasonable. Like I said, Manifest is at 9.6. I used actually preferred procedure, which isn't available in Core, to be able to take a look at it. But I got 11.5, and I was even kind of cautious on some of my numbers there. So I'm getting it with a high PE of 21. I get it with a high price of 245. Remember, it's a price at 98 right now on Friday. And if we look at this on the low price, I drop my low PE. I get something that when I have a company that has this sort of ups and downs with it, I like to give it a little bit wider range and wouldn't just keep it right at 80%. So I sort of sat there and said, let me drop to something a little bit more on the low side and reasonable. And we'll see this 10 isn't too far off from where they've been going in the past. So my upside downside ratio is almost 5-1. And you can see that it's solidly in the buy zone. And again, if you believe where they are positioned and what they're doing, this is not unreasonable numbers. If you don't think that they're going to be able to make these changes, then all the stuff I said here is irrelevant. But the fact is that if you look at this, we have a really nice total return that's going on here. They don't pay a dividend. They used to, but they haven't. So there's a lot in here that's worthwhile. So it's a medium-sized company, potentially steady growth. It's a little bit too early to say. There's my sales growth numbers. The visual analysis isn't all that appealing, but I can see the rationale. And I think the way they are positioned going forward is wonderful. If we look at the historic metrics, it's undervalued. Not a whole lot, but it is undervalued. I think it's a buy up to 112. It's currently at 98. I think it's a potential long-term holding, something to be able to consider. So that was Covista. All right, now let's go to the next speaker. Oh my God, you got me again. Sorry. I'm going to do the undervalued feature. I have to take a drink. It is water, nothing else, to be able to take a look at. So we're going to look at Trex. And Trex is the undervalued feature and the like. They are a composite decking company to be able to take a look at. And all. We never bought it, but we've actually had it in one of our clubs. Sure, we had it in Happy Destiny, but I think we dropped it from our pounce list, if I remember right.
Yes. I think we missed the boat.
Yeah, well, it may be coming back. It's been dropping quite a bit. So here again, this company is a cyclical. They didn't have, normally I like to look for on the SSGs or on when I'm doing one of the featured stocks, I usually have a quote collectively from the Management and Security Division on Security Advisory Committee why they like it. And this one didn't, which is really kind of interesting. But the company is cyclical because it's in the housing industry. These are people that are making add-ons to their homes. Management thinks that with 3 years of pent-up demand, it may be able to drive near-term growth, and that these outdoor features, as they are, really help add value to people's homes. Again, here's a visual analysis with this, again, from section 3, step 3 in the core SSG. And you'll see those are actually not too bad numbers. I mean, we can see that it's dropping below the trend lines, but not too far off. This is not unsurprising when you consider the industry that they're in. This does happen. Cyclicals happen a lot. It's okay. You can see things have dipped a little bit. They hit their numbers in November for their quarterly, but because they didn't hit the numbers that they wanted, they lost like 30% of their value. It dropped from here down to here. And you can see where this current price is, that it's just it's really gotten hammered. And really, with it selling at when it was presented at 41.76, it's now under 41. That it only has to get up to about $50 to hit their goal of being able to get to 20% return over the next 18 months. So that's about 14% per year or thereabouts. This is really what's considered a turnaround company. They've had a downturn. So the biggest things you have to look at is, do they have enough financial resources to be able to continue with this? And the like. A lot of the undervalued features will have some kind of turnaround component, particularly if they are cyclical. This one seems to be pretty well financially covered. It has a financial health grade of a B. So that's always, that's above average. It's in the top 40% of all companies in the universe. So what does it really do? They're like the world's largest manufacturer of high-performance, eco-friendly wood alternative decking and railing. What's that mean? They basically recycle plastic and sawdust and be able to combine those two to be able to sit there and make sure the stuff doesn't go into a landfill and be able to sit there and make it usable. The original person who did this, Roger, I think it was Wittenberg or something, was an organic chemist, and he did this in the mid 1980s. Patented the information in 1988. Uh, Mobil, now ExxonMobil, acquired the patents from him in 1988. It was a subsidiary of that, and then the management that sort of had it, they they took it over and they did a leverage buyout and made it public, and it went public in 1996. So they're out of Winchester, Virginia. So that's in not too far from outside, just outside the DC area, and the like. But they again have these composite deckings and fading and stuff like that. They have about 8 billion. They estimate their total addressable market is about just short of 14 billion. Most of it is in decking, but they also have it in railings, and then they have adjacent stuff. And while this product is more expensive than wood, it lasts longer and it usually sustains stuff a lot better. So in the long term, it tends to be in a lot better position to go forward. And again, as they like to point out, they don't chop down any other trees, and they end up recycling all the stuff that they have. You can look at their website, and they show you what they do. They plastic bags, newspaper bags, the overwraps on your big containers of toilet paper and paper towels and stuff like that are all used, and they recycle it. So their target audience is really sort of these people that, oh, I got the wrong one up here. This is Disney. I'm sorry. This is what you get when you get it going forward. Their real group here is that they're looking for people that generally have household income of about $125,000 a year, sort of upscale folks. That's sort of their target market and the like. When you ask for these slides, I'll make sure that you get the correct one in here. Their CEO is retiring in the next couple months after being with the company for 25 years, the last 5 as CEO. They seem to promote a lot of stuff from inside. So again, their total addressable market, as I said, is somewhere between 13 and 14 billion. Like I said, their current sales are 1.2 billion. So you can see there's a lot of room for growth going forward. They have 60% of this composite market. So you're like, oh, geez, how do they have to grow? Well, guess what? The composite market is only 20% of the entire decking industry. The other 80% is in the wood base, or I think 70% is wood based, and I think the other 10 is something else. But the fact is that while they have a domination in the composites, the fact is that there's still a lot of opportunity for them to be able to take it. And this is the area of the decking industry that's growing faster of the two. The wood deck is pretty much a stable growth. So again, here are some of the competitors that they have. I won't read them all. These are actually, when I search for competitors, it's sometimes kind of nice when they match up with what I see in the Better Investing Story. They do. But again, they have a lot of proprietary, they have a lot of patents that they've been able to use to be able to protect their stuff. One of the factors that allows them to be able to have this strong position in the composite industry. Again, Manifest. These aren't necessarily great sales numbers, and I think this is a function of, again, being in a cyclical and the like. It's a decent quality number, par so-so. This is beaten down. So that's, like I'm telling you, it is a turnaround. But if you're looking at this sort of long term, this could be a well-positioned company to be in. Looking at the SSG and core, those really aren't too bad lines. Yes, they are slowing down, and I've reflected it in my judgment going forward. But again, those are still pretty much up straight and parallel. They did dip here, but since they've had this downturn, you can see that they're sort of holding steady. And that's sort of what you will see in a cyclical industry, particularly in home builders. A lot of them are beaten down like that. The evaluate management, same thing. Return on equity is dropping. That's not good, but it's still over 25%, which is excellent. Their debt is up. So that can have some impact on this. But again, these lines up and down, again, function of cyclicality and stuff like that. But again, these are still very, very high margins, over 20% in there. So there's a lot to be able to like about this particular company. So I went with 6% for sales on, back up, 6% for sales and 6% for earnings. You can see I'm higher than the 2-year estimate for analysts. But again, I think where they're growing and where they have been historically at 12%, even when we drop it down along these lines, it's somewhere in that 6% range. I didn't get the exact number, but that's the reason why I sort of selected 6, is that this line from here about 2022 coming on out is still around 6%. And again, once the market turns around and things get better, that number I think will undoubtedly will really jump. High PEs. This is a high PE company. Some of them you can see that are in the 50s, 70s, and 80s. Even here in the good times, it's still in the high 30s. I decided to be able to take it just at 30 itself. That still, again, is pretty reasonable when you consider the current price is just under $41. The low PE, again, I dropped the low PE just a little bit, but again, that's pretty consistent with where it is when we're not in sort of the up parts of the market. I gave it, because it's cyclical, I gave it a little bit of a wide range from where it normally would be to be able to help us to be able to take a look at it. So I get an upside downside ratio of 4 to 1. I think that's pretty reasonable for this. Again, it doesn't pay a dividend. Gets a 15% return, which is sort of what we're looking for. Again, I didn't think I went really super bullish on it, but again, there are things to worry about it because of the fact that, we are in a downturn for this stuff. But again, it's a medium-sized company with the potential to be a really good, steady growth company. I selected, again, 6 and 6, which I think is really good for a cyclical of a medium-sized nature. I think it's undervalued, particularly from where it is. That's the reason why it's dropped so much in price. But I think long-term, I think their position is pretty good. I get it a buy up to just short of 42. I think it's a good turnaround play and something to be able to consider. All right, I am done talking. Now it's to you, Cheryl, and let's hear all about Vital Farms.
All right. You can go to the next slide. My name is Cheryl Patterson. I'm in the DC Regional Chapter and also in the McNova Club. I found Vital Farms in the ticker heat map. And as you can see, lots of chickens running around there. And let's get into it. Next slide. So products, they are the largest producer in the country of pasture-raised shell eggs and butter. They also offer ghee, liquid whole eggs, and egg bites. Ethical standards, their eggs are certified by a third-party humane farm animal care, certified humane. The hens have at least 108 square feet of pasture each. They operate under conscious capitalism and focus on sustainability as well as animal welfare. They provide traceable on their cartons. So you can look up on each egg carton and see the specific family farm where those eggs were laid. It's pretty transparent. The business model was founded by Matt O'Hare in 2007. Company is a certified B Corporation headquartered in Austin, Texas, that partners, now it's over 600 family farms. It operates on a stakeholder model aiming to benefit farmers, the animals, shareholders, and the environment. And their products are sold in over 24,000 stores nationwide. Next slide. So here are some of the awards that they've gotten and certifications in that conscious capitalism. They have a stakeholder model as well as their certified B Corporation. And their principles guide their day-to-day operations. And they believe delivering more sustainable and successful business. Next slide. And it's not just about eggs anymore. So they are moving into other categories. They have over $4 billion of revenue potential in these categories if they achieve their current egg market share in each. So going on from eggs and butter to beef, chicken, and pork. Next slide. Also, they've developed an alternative to factory farming practices. They have in the United States, you can see in that map, that they are right there in that pasture belt where it's not too hot, not too cold. It's really just right for raising chickens in a pasture. So the living conditions are open air, and I said the 108 square feet per hen. The feed is omnivorous. That includes grain, plants, insects. Land management is sustainable practices. And they have a network of direct relationships with, as I said, over 650 family farms, and that's growing. Next slide. Their model allows them to deliver quality at scale. And you can see from that map, the star is their headquarters in Austin, Texas, but they have grown into other states. Right now, they have a processing plant in Missouri, but they are about to open another one in Indiana, and that will improve where they can go. They're obviously heading eastward. And they will enable them to spread out to even more family farms. And so here is the VITL Farms. The Egg Central Station is, as I said, in Springfield, Missouri, where they wash, grade, pack, ship, quality control. And then they are delivering directly to consumers in those over 26,000 retail stores, and also food services as well. Next slide. So where will future growth come from? They can expand their targets to grow revenue. They can have capacity expansion and supply chain scaling. Getting more family farm networks. Right now, the family farms, they're now recruiting the future family farms. They're referring them on to the company. Growing distribution and brand penetration, as I showed you with the things other than eggs and butter, and that includes in that product line expansion. Next slide, please. So they're aiming by 2027 to deliver $1 billion in net sales. Their gross margin increased by 35%. This is projections, and adjusted EBITDA margin is projected 12 to 14% of net revenue. Next slide. So now they've got a new target to 2030. They set aside at their December 25th Investor Day, net revenues climbing to $2 billion, gross margins much greater than 35+%, and adjusted EBITDA margins 15 to 17% of their net revenue. Next slide. So here's some financial summary highlights. Here's their net revenue growth that you can see in the summary in millions. They're going year over year, increasing by 25.3%. And then the others would be 28.7% year over year to 2024 and 25. And the growth rates here, increasing net revenue by product segment. So they are saying that the increase is primarily driven by volume-related revenue growth, 27.2 million, as well as the price mix benefits of 20.4 million. And the increases in egg-related revenues are being driven by improved product performance at new and existing customers and a price mix benefit. The decline in butter-related revenues is driven by volatility by transatlantic supply chain stability. Next slide, please. So here we are with the margin performance. So gross margins was 35.8% in Q4 of 2025 versus 36.1% in Q4 of 2024 due to increases in labor and overhead costs, partially offset by favorable price mix benefits. The increase in the SG&A was in line with expectations as Vital Farms continues to invest in marketing, people, and technology to support growth. And shipping and distribution increased $1.4 million to $10.9 million, or 5.1% of net revenue, compared to 5.7% of net revenue in Q4 2024. So increases were 24.2% year over year, 27.6%, and Q4 5.7% and 5.1% for shipping and distribution percent of net revenue. Next slide, please. So the Q4 and fiscal year 2025 results and initiatives position us to deliver our long-term targets. Growth is volume-led and sustainable. Supply expansion, there we go. Supply expansion remains on track. My computer does the same thing. It's terrible. Retail performance is broad-based. Investments remain on track, and consumer engagement continues to strengthen in terms of brand awareness, household penetration, and shell egg buy rates continue to rise. Next slide, please. Vital Farms disclosure of material weakness in revenue recognition wipes out Q4 fuel gains. So they are now in the process of having to readdress their progress on remediating the material weakness in internal controls previously highlighted in their 2024 annual report. This is from the CEO in the Form 10K filings. And so they're working to fix the problem in reporting and say it's not a problem in what's going on with the company. So we shall see, but just need to keep these things in our thoughts when we are thinking about a company. Next slide. And here we go. Vital Farms, the website news in Austin, Texas, they are saying that Ms. Matt O'Hare, who founded the company in 2007 and has served as executive chairperson since 2019, is stepping down from that position. Now, he's not going very far. He's got currently 46 million diluted shares outstanding. He owns 6.3 million of those, and he still has a 14% stake in the company. So he is going to be sticking around with the company, but there is a change in the CEO by Mr. Russell Diaz-Canseco. And next slide, please. So there have also been some key issues raised by critics. They're saying the omega-6 in the eggs in yolks is similar to canola oil, suggesting hens aren't foraging enough on grass. Critics claiming darker yolks from feeding paprika and marigold coloring, which is not a superior diet. They're talking about scale and greenwashing, as well as pasture-raised definitions. How long are the chickens allowed to actually be out in the pasture? So I went to Seeking Alpha, and they said the position, so that it's not hiding anything, is telling consumers about the feed its hens raise and providing information on the website about the individual farms where the hens live and what's happening with the feed that they're giving is a supplement feed with some corn and soil. And then for the sake of full transparencies, Seeking Alpha also found out that some of the critics are owners of competing farms and pasture-raised egg products. So we shall see what's going on here as time goes by. Next slide, please. So here's Vital compared to their biggest competitor, which is Calm, and they are the producers of Eggland's Best. And here we see, just from looking at the two different SSGs, that in those final 3 quarters there, they're moving upwards. Now, the big red circles are also when there was problems with the bird flu. I think we've all heard about that there haven't been enough chickens to lay eggs and eggs being produced during these bird flu influenza spikes. And as you can see, Vital Farms they were hit by it, but not to the extent that Calm was hit by it. And also Calm seems to have a closer period when there's that big red circle up between on fiscal year 23. Their last two quarters are in a downward movement, whereas, as I mentioned, Vital Farms is upward. Next slide, please. Okay, here is Manifest Investing, looking at Vital. They have a 26.3% growth. Their Proof factor is 30.9 with a quality of 96 and a par of 35.6. And if you look at the graph over there to the right, a chronicle is what it's called, you can see that the blue line is quality, and that has risen substantially. It was kind of across for a while, and now it's come up quite a bit. The red line is par, and that has also got its ups and downs, but it is also quite high in that later period. Now we look at Calm. Their price is 87. Their growth is a negative 11.5. Proof is only 12.6. Quality is 14, and par is a negative 13.8. As we can see, with the blue line and the red line, they've come down from their highs. Next slide, please. So here is Value Line. It's the January of this year. 18-month target price range is $52. So, and with the 2028 to 30 projections of low of 14 and a high of 25%. Looking at on the graph there, it's looking like that dot is just slightly below the dotted line, which is the value line. So they may be undervalued. Earnings per share is continuing on an upward clip out to $3.30. And revenues are also going along upward to 194.5. Operating margins also increasing as the years go by. Next slide. So here's the bottom part of Value Line. You can see the annual rates there. Value Line is saying a 22% increase in revenues or sales. It's the same thing. And earnings per share is 33.5% increase. They're saying that their neutrally ranked shares have plenty of room to run out to 28 to 30. And the long-term prospects are promising, especially with that new facility opening in Seymour, Indiana. Next slide, please. Here's our SSG. It's pretty much up straight to the right, but you can see the price. The red line there is pretty much down at near the bottom of the 52-week, but the quarters are still. There was a slight dip in earnings, but they're back on an upward trend here. Year ago quarter, there were sales increased by 37.2%, earnings per share 125%. I gave it forecast sales 18 and earnings 18. You can see management, the trend for pre-tax profit is up, as are the ROE, with a nice 20.5% for the return on equity, which puts it in an excellent territory. And debt is down from the average. Next slide. So this is looking at some other factors that in the SSG, the debt to capital was down. It came back up a little bit, went down again, and now it's slightly up again. However, if you look at the bottom for the liquidity ratios, interest to coverage, anything above a 1 is great. they're at 92.9%. So can't get much better than that. The diluted shares outstanding, they have increased a little bit over the quarters, but that's because the employees are allowed to buy into shares of the company. And that's what causes that slight increase. Free cash flow line is up. However, in the next slide, we're going to explain about that free cash flow line. So, smaller companies, cash flow or debt. Small companies may use cash flow instead of debt to grow their company. Using cash maintains ownership and control, forces discipline, financial independence. Business remains flexible, not needing a lender approval, and it builds a solid foundation. Next slide. So the key question isn't really cash flow or debt in absolute terms. It's about the specific circumstances. How predictable is the revenue? Many successful small companies end up using a hybrid approach. And what matters most is the decision aligns with both the business's economic reality and values about ownership and risk. Next slide. So here we have the next part of the SSG. I took out 20, 21, and 22 because the numbers were far off from reasonable numbers, as well as that was not only COVID, but also bird flu happening at that point in time, if you remember that slide. The current price to earnings ratio is 16, as opposed to the 5-year average of 24.9. It is a buy right now. It's showing up at 8-to-1, upside downside, and it selected forecasted low price was 14.3, with the high being 75.5. Next slide, please. So here we have, again, upside downside, what the formula for coming to that. It's at a buy. It doesn't pay a dividend, but the total return right now is at 29.1%, with the projected return of 22.5 at the average PE. A current price, as I said before, was $21.09. And next slide, please. So here's our potential gain versus loss thermometer. You can see here the different ranges for the sell, hold, and buy zone, but they are securely in the middle of that buy zone, with the 21.1 at the current price and the forecasted low price of 14.30. Next slide, please. So in conclusion, it's a small size company with a C Morningstar financial health grade. That's average. It's a well-managed company. It's currently undervalued, trading well below at 16 to the 5-year average PE, 24.9. It's a buy up to $82.30 with the buy price of $29.60, and to satisfy the 3-to-1 upside downside and the 15% total return. Already told you the current price. It has a total return of 29.1 if it's sold at the high PE, and it's a worthy candidate for your research consideration. And that's my report.
Okay, thank you, Cheryl. And next, last but certainly not least, Marcia Cooey from the Portland chapter, as well as the Golden West, is going to be able to tell us about United Therapeutics. So take it away, Marcia.
Well, good evening, everyone. As you can see on this slide, I'm a founding partner of the Golden West Model Investment Club. We were originally the Orange County Model Investment Club in Southern California. And I originally heard about United Therapeutics in 2011 when the stock was presented to our club by Ron Bruin. And I have to admit, I've heard presentations from numerous clubs since then, and from, I just saw the first cut in Better Investing. So let me just jump to that. I just want to give you a path, breadcrumbs treat to get you to the first cuts. You log into Better Investing. You go to the Find Great Stocks on the menu, and then you slide down the page until you can put in UTHR to find that company and view that stock online. Next slide. I skipped my slide here. So let's go one more slide. All right, here is the website to United Therapeutics. And I don't have to talk about this. We can just look at this for the next 25 minutes and not get it all. So let's enter into United Therapeutics and go to the next slide. Notice that under the logo for United Therapeutics, it says they are a public benefit corporation, and that's a PBC. It's different than a B Corp or a B company that Cheryl mentioned. This is their vision and mission statement. And just for reference, when you get into this page from that brightly colored page at the entrance, up in the right-hand corner is where you'll find the link to investor relations. All right, next slide. Here's just a quick overview. The symbol, company size, it's medium, between 1 billion and 10 billion in sales. They just had their earnings release on Thursday, and they they're over. They just announced that they're over $3 billion for the first time. The industry, now I've got a couple of different industries here. Depends upon who you look at. If you're looking at Better Investing or the Morningstar Library version, they are drug manufacturers, specialty and generic. And in Manifest Investing and Value Line, it's biotechnology. And I like to look at the peers in a lot of different locations because maybe I'll find someone that I can study that I like better than the company I'm studying for my club or for some presentation. So the first company you see here, Neurocrine Biosciences, is in both Better Investing and Value Line. That's why they're bolded. And I went to look at it, and it's a company that's dedicated to underserved neurological, endocrine, and psychiatric disorders. So I could not find a straight peer-to-peer company with a stock symbol, but I did find a privately held company called Ingenesis that uses CRISPR-engineered pig organs to provide potential xenotransplantation to kidney, heart, and liver patients. Next slide. Okay, so this is the lovely founder of United Therapeutics. She is the founder, chairperson, and CEO. And just recently, I think they announced that she's now the co-CEO And I think that's because she wanted to start her own subsidiary to United Therapeutics in order to build a fully electric helicopter. She is an airplane, seaplane, and helicopter pilot with night vision goggle certification. And as you can see here, she's got quite a bit of substantial degrees under her belt, mostly from UCLA in the late 70s and early 80s. The BA in communications is really satellite communications, and she graduated summa cum laude. In 81, she graduated with the MBA and a doctorate of jurisprudence as an attorney, and then she moved to DC to practice satellite communications law with a firm there. Finally, in 1990, she formed World Space and the company that would become Sirius XM Satellite Radio. Now, I bolded the year 1994 because that's a turning point in her life. Her 7-year-old daughter developed a deadly lung condition. And I have it in quotes called primary pulmonary hypertension. However, there was no name for it in 1994. It was just a condition and it was lethal. So at the same time, she started to study everything she could get her hands on regarding biology, and she started that medical degree for which she received a PhD in 2002 from St. Bart's in London. And in 1996, she started United Therapeutics because all the doctors that she took to her daughter to for help, she was very disappointed and frustrated that they weren't able to do much for her daughter. Next slide. Oh, and I wanted to show that caricature because that website for United Therapeutics is so fascinating that all of the CEO or C-suite officers in the company have caricatures. So take a look at it because I'm going to send you to lots of places there. All right. So I wanted to know what a public benefit corporation was. I had to give a presentation to my club, and that made me kind of nervous that I couldn't answer that question right off the top of my head. It is a for-profit entity authorized by state law to generate profits while also pursuing a specific defined benefit such as environmental sustainability, education, or community health. So the negative part of it is while they can raise capital, some investors may still prioritize higher short-term financial returns over long-term social impact. And in addition to the work that they're doing with the xenotransplantation communities, they are building LEED Platinum certified sustainability buildings for their offices, warehouses, and particularly for their laboratories. Their medical community partners are really attracted to the sustainability aspect of the company. Another PBC that the BI community might recognize is Viva Systems, symbol VEV, which is their backroom life sciences business operations support software. Now there's a hyperlink to UTHR's PBC website on the resources page at the end of this part of the presentation. When my club team studied the stock, one of my partners ran it through Bakul Lala's 10 financial ratio spreadsheet to evaluate management effectiveness. And this is a just a 10 financial ratio spreadsheet that shows you trends of these different ratios, and it passed our objectives for having this stock in our portfolio. And in the resources page, I have a link to that course that Bakul taught, and there's a handout from the course. I want you to go ahead and take a look at it, and if you have time, you can visit the Portland chapter website and check out that spreadsheet for yourself or for your club. And we wanted to do this particular spreadsheet in case we had a partner who objected to this stock for that reason above. And we did have such a partner when voting started. And the rest of the club passed the vote, and we made that guy the stock watcher for his efforts. Next slide. Okay, this is what happens when you first open up United Therapeutics. Something happened in 2009. Usually we see a dip in 2020 for COVID, but they did okay throughout COVID. But 2019 was a big question mark. And you can see there that sales growth was only 5.9%, even though historical earnings per share was 12%. And the pre-tax profit was 11.8%. Next slide. All right, so now I took out just the 2019, and boy, I hate the growth numbers on the right-hand side even worse. 5.7%, 5.7%, and 2.9% for pre-tax profit. All right, next slide. So I took out the first 5 years off the graph. Since we're most interested in the second 5 years, but I was determined to find out what happened in 2019, and we'll talk about that later. So now the growth percentages look pretty darn good. For historical sales, it's 17.9. For earnings per share, 24.5. For a pre-tax profit, it's 28.7. And I really like the quarter-over-quarter, recent quarter figures for earnings per share at 12.1, and sales is okay at 6%, 6.8%, but there's only a 2-year estimate. And the reason why, I think, is because as you're looking at the chart, the visual analysis on the left, you can see the prices are going up and up and up. And in fact, that little red barbell at the top of the last price line is telling us that the stock is at an all-time high. And as of Friday, the price was $503, and today's close, it was $513. Next slide. So what happened in 2019? Before I presented this stock to my club, I really wanted to know, was this a significant lawsuit or one-time event? What was it? They had this agreement in 2019 to do a one-time payment of $800 million for a business development deal. Now, with Arena Pharmaceuticals. Now, the company they were working with had developed this clinical trial that was in level 3 review, and it is for a product called Ralinepag. I'll Braulienapeg. I'll have to get the actual pronunciation later. And they were given worldwide rights to manufacture and distribute this product. And they also suffered a drop in revenue from their drug Adcirca due to generic competition. So the company reported a net loss for the full year of 2019, contrasting with a profitable 2018. So United Therapeutics had the option to pay this $800 million over 5 years, but they chose to pay it up front. Now, why did they do that? Well, we had an interesting argument with one of my, oh, let me not say argument. It was a discussion with one of my partners on the team. And he was a serial entrepreneur himself, and he felt like they should have taken the payment over 5 years. He thought it was kind of crazy, but I told him that I didn't feel uncomfortable with that because a few years earlier, I think it was in 2013, Starbucks lost a lawsuit from Kraft Food Company for breach of contract. Starbucks had dropped their contract with Kraft Foods Company 3 years earlier than scheduled, so they had a breach of the contract. And Kraft Foods won the lawsuit, and Starbucks was told to pay $2.7 billion with a B dollars to Kraft Foods for their loss. And Starbucks did just the same thing. They decided to pay everything right up front. They weren't going to pay it over the 5-year period. And the reason why was they didn't want it on their books so that their investors would see that year over year and wonder, what is that payment for? Well, they lost a lawsuit. So who wants to advertise that? And remember how fast that dip came back up the following year? I think United Therapeutics felt the same way. They did not want to see their investors or potential investors seeing them pay that $800 million over 5 years. They didn't want it on their books for the very same reason. They didn't want them to worry, because in 2021 is when they wanted to become that public benefit corporation, and they needed the investors to vote in their favor in order to achieve that public benefit corporation status. All right, next slide. That was a long story, but that's what we decided to do, is share that story. Now here you can see the evaluating management and the PE history. I'm doing this in the SSG Plus. And what I would like to point out, this is a fabulous pre-tax profit on sales for this type of company. It's pretty high. The 5-year average is 47.1%. And the return on equity is good. It's 15% plus. And the debt to capital is also a very good number at 13%, because it's trending down. This company has a lot of free cash flow, and that's why they were able to pay off that $800 million in a single pass. They had the money to do it, and they wanted to do it. All right, so we like the management statistics here. The numbers are terrific. And the price earnings history as an indicator of the future, this is the section where I look at the pieces of information in that bottom box in order to make a determination of what my high and low PE judgments are going to be. All right, let's go to the, oh, wait a minute. Let me just state what they are so you can see what I'm talking about. The 5-year average PE ratio is 13.6%. The current price earnings ratio is 19.1%. And I look at the 5-year average high PE at 17 and the average low PE at 10.2. That's what I use to make most of my judgments with. Okay, next slide. And I used to use big charts when I was projecting my PEs. And we don't have big charts anymore. It got taken back from the company that owned it. This is a chart from E-Trade, and it shows pricing at the top of the graph where you see the blue mountain cover here. And you can see the pricing is going up. And that 503.90 that you see on the top of that pricing chart on the right-hand side in green is basically where we were at last Thursday. The next chart just below it is the trailing 12 months earnings per share. And you can see it as the prices are going up, the earnings per share is stepping up also. Now here's where we get to the most important part of this chart. It shows the PEs. In section 3, we see the 1-year high PE and low PE for 5 years, but they're just single points that probably aren't a realistic PE of anything, because you're seeing how the PE is going up and down over this 5-year period. The red line on top there is showing a PE high at about the 12th of January in 2022. And on the bottom right, you're seeing the low PE. And my club bought it in July of 2025. So probably below that blue line is where we bought it. And that's really an important way for me to judge what my PEs in the future are going to be. All right, next slide. So I like to get to know what the products are that my company is making. Right now, the left box on the left part of that page where it says current commercial portfolio, those are the products that they are selling now. The top 2 products are called Tyvaso DPI and nebulized Tyvaso. These are products, all the blue products except for that bottom one, Unituxin, are used for pulmonary hypertension. That's a general term for high blood pressure in the lung arteries. And while pulmonary arterial hypertension, PAH, is a specific, rare, and progressive subgroup. And this is where the arteries themselves are diseased. That Unituxin product on the blue is an injectable product that is used for neuroblastomas in pediatrics. So a neuroblastoma is a brain cancer, and their youngest patients are in that category. All right, and anything that is ILD, let me see if I can get this up here. Anything that is ILD is an idiopathic lung disease, and that means there's no known cause for it. I had to look up about 90% of the terms on about 3 pages of information for me to understand what these products are. So a lot of my research had to do with Google searches. And I like the fact that this company is doing work in these areas because nobody else is. I couldn't find really direct head-to-head competition. They are the only, they're not the only lung people out there, but they're the gorilla in the room for doing anything relative to lung diseases. All right, and let's see, IEVLP, which you see in the bottom of the green drug and device pipeline, is this ex vivo lung perfusion regimen that they have. That means that the technology keeps donor lungs alive, functional, and breathable outside of the body at normal body temperature before transplantation. This allows surgeons to evaluate, treat, and improve marginal or previously unusable lungs, significantly increasing the donor pool and reducing waitlist mortality. So this means that for transplantation, this is human to human lungs, or they could use xenotransplantation to do this. Pulmonary hypertension for COPD is a product that they had years ago and are just now bringing back. And of course, lung transplant medications are also in their pipeline. The rest of the sort of blue-green colors up there are lung products that they have in their pipeline, and some of them are enhancements to their existing products that they have for sale. I want to mention Ralinepag, that Ralinepag that I can't pronounce, is the drug that was purchased from Arena Pharmaceuticals, and I'll tell you why in just a moment. Finally, the organ pipeline on the right includes xenotransplantation for lungs, kidneys, hearts, and heart and lung combinations. Oh, livers. So those are the 4 types of transplantation that they're working on, and the donors are pigs that they have treated and changed their genes to allow them to accept those transplants. All right.
Marcia, can you finish in 5?
Yes, I can. I know I'm taking up a lot of time. All right, so I'm going to move on to the next page. This is currently pigs that they're working on, the next screen. This is their current product line showing the growth. They had, for Tyvaso, that's their #1 biggest product. And this is low for them because they're Their sales are generally lower at Christmas time, and in January they had weather issues, so they didn't have as many transplants and clinical trials going on and that sort of thing. But their total revenue is up 7%. And let's go to the next page. Here you've got both their drugs and devices at the top in the green. That advanced outcome Ralinpag, which is in this magenta color, is a product that they just announced today. They had a press release in their investor relations that product has finally received the results, the advanced outcome results that they were looking for, and they are ready to file it with the FDA and expect approval sometime before the end of next year. Okay, and the rest of the status here of the different types of lungs, kidneys, thyroid, and kidney transplants, that's all in the xenotransplantation pipeline that they have. Next page. So here's my conclusions for UTHR. It's a medium-sized company that is growing profits. It's well managed with significant cash flow. It's a bit overpriced, trading above its 5-year average PE of 13.6. Again, the price on Friday was $503.90. The current PE is 19.1. The trailing 12 months high PE is 20.4. And the high PE is 21.7. And according to my SSG, the UTHR is a buy up to 490. Using my Friday judgments, it is barely a hold and a worthy candidate to add to your watch list. And I noticed that if I did a few adjustments to that SSG, like either increasing my earnings per share from 11 to 12, or my low PE adjusting it from 13 to 13.6, it would be a 3-to-1 upside downside ratio. And just in case I didn't mention it, my choice for sales was 10% and my choice for earnings was 11%. I've seen a range that goes from 10 to 13%. Manifest Investing is saying that the PE, the PAR would be 13%. Next slide. Let's go on. Would I recommend a buy? Yes, I would, if it fits with your portfolio. And the price today went up $10. Here's my resources page. All of these are hyperlinks to the website, to the discussion of the Public Benefit Corporation, and the history page. Take a look at that history page. It's just stunning how interesting that is to look at. And I did that financial ratios checklist from Bakul Lala, and I want you to take a look at that. Also, I have a great announcement to finish this whole presentation on. Dr. Rothblatt, Martine Rothblatt, was nominated to the Forbes 250 America's Most Innovative Leaders, and she's number 8 on the list. And Elon Musk is number 1. So there were some presentation technical difficulties on Thursday. The transcript is there. And the handouts from Bakul Lala's presentation, the hyperlinks are broken on the handout, but I don't think you need them anyhow because the presentation was done in 2020. And that is the end of my presentation. Oh, and I have a recommendation for you.
What's that?
Check out that hyperlink to America's Most Innovative Leaders and find out what companies they are running, because those are very interesting companies to study for stocks. That's my recommendation.
Very good. Thank you. Thank you very much, Marcia. Long, but I mean, I've always wanted to hear more about United Therapeutics, so thank you very much.
Yes, thank you.
Okay, so now that we've done that, we want to be able to sort of ask all of our presenters to be able to talk about where the stock fits in each of the life cycle. And life cycle is something that comes from T. Rowe Price, and we'll just sort of go straight to it. So with T. Rowe Price, he always said earnings for most corporations follow a life cycle just like a human being, where there's growth, maturity, and decadence. I'm going to talk the first one, Covista. It's been around a long, long time, but the fact is that I think where they've positioned themselves, they can be in a mature growth, right, sort of smack dab in the middle, going forward for a long period of time because of the overwhelming need that they have in there. With Trex, I'm going to say it's a little bit more in the center, mature growth. I think overall the industry that they're in terms of being composite plastics and being able to do recycling is quite good. It is more expensive than wood, but the maintenance cost long term brings that down. I think it's something that's going to come on in, but again, they're sort of limited by they're going after some of the high end folks that it can afford to be able to do that for their decking. But overall, I think it's still pretty good. Cheryl, why did you pick that location for Vital Farms?
Well, I still think they're kind of toward the end of explosive growth. They are, as I said, adding on that area in Indiana to do distribution, as well as word of mouth. The farms, as I said, when I first started to do it, was saying over 300, and then I ended up, it was about 650. So they're still putting in there quite a bit of growth. And so you just kind of see in terms of those uh-ohs as to how things proceed in the near future.
Seymour, Indiana. I've actually been there.
Ah,
All right,
Linda
Marcia,
probably knows about it.
why that location for United
Well,
Therapeutics?
it's in that area where it's not too hot, not too cold, where
Mhm.
you can have chickens out in the pasture. So that's a big deal in terms of having this type of situation, that you've got to pick an area of the country that's kind of tempering the temperatures and things.
Not too far from Bloomington for
Mhm.
most folks. Anyway, Marcia, how about United Therapeutics? Why did you pick that location?
Well, I picked that location for the pulmonary hypertension uh, uh, parts of their business, because they are, like I said, the 800-pound gorilla. There was nothing when they first started the company, but that's where they stand right now. There's probably nobody out there, chasing them too much. The part where they're going to experience explosive growth is when they finally get all of those approvals for the xenotransplantation products, and that's approximately by 2030. So if you move that star back down to explosive growth in 2030, that's what I think it will happen. It's like moving from mature growth and creating a whole new product line for them.
Very good. Okay, Cheryl, do you want to release our? We ask people here not so much what company they want that is the one to buy, but which one interests you enough that you want to do further research yourself. So, Cheryl, go ahead and release a poll, or do I have to do that?
No, I did it.
Okay, very good. Thank you. All right.
Oh, let me add one more thing. So you guys vote for United Therapeutics, please. Every 17 minutes, someone dies waiting for a kidney to be transplanted.
Wow.
And in uh, there are 90,000 people in the United States right now waiting for a kidney transplant. So that's the business that you're looking at in the future.
Okay, thank you. So we have just over 50% of you voting. Please go ahead and give us a few more votes here. We have one person who's doing quite well, and a couple of the others that are just sort of drifting towards the bottom. All right, we got 75% of you voting. Let's see if we can get one or two more. See if we can get up to 80. I know we've lost some of our audience because I'm sorry we went long. We all like to yak a little bit, but hopefully you learned something here. All right, I think we're pretty much we're over 80%. Let's go ahead and close it out, Cheryl. And will I share, or will you be able to share?
Done.
Okay, I cheated.
Yeah, you were talking during the voting. I don't know if we allow that. So a runaway winner. And obviously my two are sort of right up at the bottom there. Anyway, let's go on here. If you need to be able to reach us, like I said, we'll get the slide decks. Just come on over here to this digging into BI, and we'll have the slide deck up there for you. Again, if you need to be able to reach us in the DC chapter, here's our address. Here's again the Maryland one, and here's a picture of us at the last in-person bank. A lot of us that have done these SSG presentations. Please come and see us. Please participate. It's a great way to promote your club, and more importantly, how to become a better investor yourself. Here's how you can be able to join us for our mailing list. It's the URL up here at the top. And again, you don't have to be a member of the DC chapter, but you will get the notices on it. Carol does a wonderful job of getting those messages on out. We don't bombard you, just enough to be able to let you know what we're doing educationally. Cheryl, you want to talk about volunteering and why you should want to do it?
Well, these chapters don't run themselves. I mean, the wonderful programs that you see in the chapter listing is not only in our chapters, but in the other chapters around the country. They need volunteers to make them operate and to keep them going. It's amazing. I think it being in the chapter, I learned more than all the other years that I was just coming up the ranks. People are willing to share in better investing, and that you can learn new skills. You can hone those investing skills. You can help to educate others. I know I had a large class that and really appreciated all the information that was being given to them. But we need people to be able to do this. Come join the fun, help teach others, and you will learn more yourself to become a better investor. Next slide.
And I also want to say is that when we were featuring the club that started with the yard sale, they were in the audience, although she just left, Rosalind, and stuff like that. Maybe some other people in the club were here. I sent her a chat message, but she didn't respond. But she was in there maybe long enough to vote and then left. Anyway, here's what we have coming up in April. It'll be the first Monday in April. The stock to study is Service Now, and the undervalued feature is Decker's Outdoors. And again, to be able to help with some of the conversations and going on, I didn't even look to see if we had any questions. I know we went so long to be able to see if we had any. Do we have any hands up? We do have a couple questions.
We had some, but they left.
Okay. If anyone does want to raise it, you can just raise your hand. With the hand icon, we'll pick it up. But anyway, Decker's Outdoors, the undervalued feature. I have two presenters. I'm looking for two more. Please consider joining us and participating. Marcia, thank you very much for helping us out tonight. It was great. But again, it's a great way for us to be able to work with you and help you develop your presentation skills, and also to be able to help you become a better investor and get your own club involved. So those are the things to keep in mind. I hear the stuff up at Manifest dashboard. I do need to update those. I know I'm behind on that, but these are all hyperlinks over at Manifest. And then I will get these on up as soon as I can over to YouTube. I've been behind, but I think I finally caught my breath on a couple projects I was working on, so I think I can focus on it. But thank you very much for being here. I'll take one last look, see what we had in terms of questions.
Yeah, the only other question mark next to a name was just thanking us for doing this.
Okay. Yeah, all right. All right. Well, thank you, Marcy, for those kind words. Anyway, I think Helen, do you have your hand up? I see Helen's still in the audience. Here, Helen, if you, I unmuted you, so go ahead, Helen. Welcome from Georgia. Oh, did we lose it? There we go. Try it again. There we go.
Hello, this is Helen, the person that presented UTHR. I just downloaded the material and it's only the stock selection guide. She had a whole lot of other information and links. Will we be receiving that separately?
Yeah, like I said, I had trouble getting the slide deck over to Cheryl, so that's the reason why I'm actually running the slides here. But just reach out to me, and I'll send that out to you. That way, you can get those URLs that Marcia had on her presentation. But yeah,
Thank you.
just reach out to me, and I'll get it over to you. Okay.
Kevin, your email is the one you first put out there. I think
Well, you can do. Here's the best one to do it for. Is let me come back up here, right there. The digging into BI is a good one to reach me at.
Okay. Okay.
Go ahead and do that. We'll get it on out to you. I just had a technological problem. It wasn't helping us out. So anyway, that's really it. Any other questions?
Oh, that's great. Thank you.
Okay. Very, very good. There we go. I was moving away too fast. So what else do we have in terms of questions? I think we got it all.
Yeah, Dan
Thanks.
Bishop said, we will see you all at Bink in Chicago.
And Dan, don't worry, we're going to get you here for a presentation. We got to get Georgia representing. Are you ready? You ready next month, Dan? We met Dan for the first time in person, Cheryl and I, at the Georgia Investor Fair in August. So please come and join us. We like Cheryl and I. We even like going to other investor fairs just to see and not have to do any work and just sort of learn. So we're looking forward to that. All right. With that, I am going to move this up to the end. And we want to thank you for being here. And we look forward to seeing you next month in April when we, again, look at 4 new stocks with new presenters. Thank you very much for being here. Have a good night. Good night, all.
Thank you.
Bye.
Marcia, thank you very much for joining us and helping out.
Thank you very much for inviting me. Twisting my arm too.
I have to do that. All right. I think I'm going to close this thing out. We're down to just a few folks there.
Okay,
All right. Good night.
good night.